Canoo to start production in early 2025. Analyst says Canoo hints at production progress as stock nears all-time low. H.C. Wainwright analyst Amit Dayal released on Thursday a new research note lowering the firm's price target on Canoo to $4 from $7 following the second quarter results published on Wednesday. Despite cutting the price target by 43%, Dayal has maintained a buy rating on the shares, as the new price target still implies an upside potential of 159.7%. The analyst cited changes in the expectations with respect to the company's production ramp timeline, as it expects now Canoo to start production early next year. We were previously expecting the company to begin initial production in 2H24, but commentary from the 2Q24 earnings call leads us to believe that the production start may now be pushed to early 2025, Dayal stated. H.C. Wainwright's analyst noted that Canoo has been controlling costs and lowering cash burn as the company manages its supply chain in preparation for production, which he expects will begin in early 2025. The company has been controlling costs and lowering cash burn, with operating expenses dropping by $20.7 million, or 33% sequentially. The management is now guiding for adjusted EBITDA loss of $120,140 million for 2H24. The company highlighted that it is now working towards completing the production setup with the arrival assets on hand while harmonizing the supply chain with production needs, the analyst added. Dayal sees customer vehicle deliveries as the key catalyst for the stock, while saying that the manufacturer is continuing to engage with existing and prospective to grow the order book. Canoo has also received foreign trade zone approval for the Oklahoma City facility. We believe the company is continuing to engage with existing and prospective to grow the order book. This includes vehicle deliveries to the U.S. Postal Service USPS, entry into Saudi Arabia, completing Phase 3 milestone with Defense Innovation Unit, and concluding the Red Sea Global Pilot. However, we reiterate that vehicle deliveries to customers, in our opinion, remain the key catalyst for the stock. Reiterate buy rating, he concluded. From Roth MKM analyst Craig Irwin reduced on Thursday the firm's price target on Canoo from $3 to $1.50, while maintaining a neutral rating on the stock. Canoo's chief executive Tony Aquila said the second quarter results represent good progress, with customers adding that they drove more than 34,000 recent real-world industrial use miles. The stock reached a record low at $1.22 per share in March, reflecting concerns over the lack of progress in the pilot programs announced over the last 2 years. Canoo hints at production progress as stock nears all-time low. Oklahoma-based Canoo is scheduled to report its second quarter earnings on Wednesday after the market close. On Monday, the company shared on social media pictures from the 3-day partner event at its facility. We're taking a different approach on our Canoo journey and are deeply grateful to our suppliers for joining us at this inaugural 3-day event. Your engagement and support inspire us as we work hard to advance our mission and strengthen partnerships for the future of mobility. Together, we'll build a promising future, the company wrote on LinkedIn. In the photos shared with the post, Canoo showcased factory workers assembling vehicles, partners touring the facility, and CEO Tony Aquila addressing the attendees. As the stock nears a new all-time low of $1.45 per share, investors are eagerly awaiting production updates and final order numbers from the EV startup, following several pilot programs announced in recent years, such as the deal with Walmart announced 2 years ago. Canoo shares have plummeted 73.47% year-to-date, reflecting concerns over the lack of progress in production and weak demand from fleet customers across the country. On January 17th, CFO Greg Etheridge publicly projected deliveries of 3,000 to 5,000 vehicles for the year. However, as reported by EV, A confidential document filed the same day revealed that the company actually anticipated delivering only roughly 100 units of each of its two main models, the LDV 130 and LDV 190. In the past month, the stock has continued to decline, falling 41% since mid-July. Geode, the index fund arm of Fidelity, has published the quarterly update of its portfolio, revealing that increased its stake in the EV startup by 150.61% over the last 3 months. As of today, and according to Fintel, the company has 113 institutional shareholders holding a total of more than 7.56 million shares. Geode Capital Management operates independently but is closely integrated with Fidelity Investments, as it oversees a substantial portion of Fidelity's index and passive investment strategies. Last week, Fidelity published its updated portfolio as of the end of the second quarter, disclosing that has drastically reduced its position in the EV startup across 4 funds,